Joining us now, first on CNBC, right here at Post 9, Airbnb co-founder and CEO Brian Chesky. Brian, it's good to have you here.
Well, thank you for having me today.
So the quarter was good.
Yeah, great quarter.
The outlook, not so much. Big thumbs down from the market.
Well, we're being a little cautious about Q2, and part of the reason why is a couple things. Number one, we're lapping Omicron, and last year a lot of trips were booked in Q2 because people weren't comfortable booking in Q1. At the same time, we're also seeing some pressure in North America on affordability. I think that with inflation, people are more focused than ever on affordability, so that's why we're really focused on trying to make sure prices are modulated in North America. And last week, we made a major series of upgrades based on getting Airbnb to become more affordable.
So talk us through the pricing strategy a little bit more.
Yeah.
How much higher is it, say, than pre-COVID levels, and where does that go?
Well, it's about 30% higher, but a lot of the increase is also a mix shift. People traded from smaller apartments in North America to larger vacation homes. But we do need to make sure that Airbnb remains really competitive. And so there's a few things we're doing. The first thing, the most important thing, is make sure we have enough supply on the platform. Last year, we added 900,000 incremental listings to Airbnb. That's number one. Number two, we're having more discount tools for hosts. So a lot of hosts told us they don't know how much to charge based on other properties in the area. So we're now letting them compare and see who's getting booked and who's not getting booked in the area. And third, and maybe most important, we launched Airbnb Rooms. Airbnb Rooms is an all-new take on the original Airbnb. Allows you to stay with a host. Average price per night, $67 a night. So I think all these things are going to allow us to be the most affordable way to travel once again.
A lot of people did note the supply growth that you saw, that you just mentioned,
so important,
but are wondering if supply is now growing faster than demand.
Well, it is, and that's ultimately actually, I think, a good thing, because the supply grows faster than demand. It increases selection, it lowers prices, and what do we know about Amazon? Greater selection, lower prices leading to more customers.
So I was going to ask, what does that do for revenues?
Ultimately, I think it's going to be great for revenue, obviously, in the long run, because it's going to bring more guests to Airbnb. So you really want supply in advance of demand. And what happened with us in 2020, 2021 is demand surged. That was great, but it grew faster than supply. That probably increased ADRs. And ultimately, that's good for the bottom line in the short term, but you have to make sure you're delivering great value. So it's really about balancing supply and demand. That's a bit of the secret sauce.
Does a more pressured consumer naturally lead to more supply? You need some extra income, you rent out your room?
Absolutely. And that may be part of the reason why in a great economy, demand outstrips supply. In a not so great economy, you start getting a lot more supply. But ultimately, again, that makes prices, really more modulated, and that, of course, will create more demand.
We've talked to a lot of hotel chains after their quarters. Do you think Legacy Lodging is making a mistake on their pricing? Are they going to pay for this?
I mean, what I'm hearing is that they anticipate prices going up over the course of the year. Our hope is that our prices do not go up, especially in this economy. That they either stay the same or they potentially even go down. And if that happens, I think we're going to see a lot more demand and potentially more mix shift to Airbnb.
Increased marketing spend, right? That was a big reason for the guidance.
It was also just change in timing. We intend to spend about the same amount on marketing as a percent of revenue this year, but we are spending it earlier in the year.
Okay, because I was wondering if you were increasing it and how you're going to judge that return on investment.
Yeah, I mean, it's just really the same as before. We have a full funnel marketing strategy. It involves PR, brand marketing, and performance marketing. Most people in travel, they just do direct marketing and then a little bit of brand marketing. We try to do something that's much more full funnel. We get hundreds of thousands of articles every year. There's much more earned media. And 90% of our traffic is direct or unpaid, and I think it's going to stay that way.